What's up, everybody? It's Chase NL. Today we're going to cover range trading, how to execute trades within a range, how to identify the range, because I think, most of the time it seems too easy, right? People just say, oh, we got a high, we got a low, runs the low, target the other side of the range, runs the high, target the other side of the range. And sometimes it is that easy, but ranges are taking place all the time, and it doesn't need to always just be the most easy example to spot. Those often work well, and there's nothing wrong with them, but we're going to try to get a little deeper, some nitty gritty aspects of it. Before we get into that, real quick thanks PrimeXBT. Appreciate them sponsoring these educational videos, and also thank you to you guys. Any type of constructive criticism, feedback, any topics you want to hear about, my DMs are open. Feel free. All right, so how do I identify a range? First thing I like to see is I like to see a range, build into resistance. Okay, so we can see obvious resistance here. Breakdown, resistance again, all this consolidation, breaks down again, retests it one last time, high volume breakdown. Okay. Then I'm looking for a support level, basically after a shift in market structure. I want to see like a bottoming process or a topping process, and then typically you form your range after that. Okay, so let's let this play out a little bit. And obviously, yes, this is a cherry-picked example, but I can't create a range out of thin air, so I have to I had to dig into hindsight data basically in order to show you guys this video. It took me 3 minutes to find this range. Okay, there's a bunch of them. You can find them anywhere. You could draw one right here, and I'll show you one right now. And you can even draw one currently on the top of Bitcoin. It's been ranging back and forth for a bit, for I think the past 12 hours or something. Okay, so let's get into it. First thing we want to see here is the break in market structure, so we can have some type of support that we can trust and know that we've sort of bottomed. Okay, so now we're seeing the break in market structure, right? We got low, high, lower low, lower high from here to here, okay? And then we break right here. Okay, so at this point we can say, oh, we have a break in market structure. Now this was the consolidation in here that led to the break in market structure. So this is just simply an SR flip, as I would call it, support resistance flip. We can see resistance here, we can see support here. So what we want is we want the range to, one second here. Whoops. I like them to be fully extended. Okay, so we want the range to basically form between a resistance level and a support level, because this should be where our resistance or our range forms, because we're not going to break this level in one shot. Look at all this consolidation, and it also led to the high volume drop. And this level is also significant because we broke market structure here. We're starting to look bullish off the bottom. Okay, so let's let this range start to form. Go forward here. So now we're into resistance. This is sort of what we want to see. We should start to see a stop in the advance at resistance, and it should head back down towards support. Okay, now that we're at support, we want to see some type of response. Okay, we want to see a bounce. Okay, and that's how we're going to start to think that, okay, there might be a range here. There we go. So now we have a significant bounce towards what we would expect would be about the equilibrium of the range. So we have resistance. Let's mark this out. And I'm going to show you why it's not just, okay, well, let's throw a risk reward tool below the low and hope for the best, because that's an easy way to get stopped out. Because what if this isn't a range, right? And what if this is just simply a bounce? Okay, what if this is just a bounce and then it just comes back down and just goes down? That's perfectly possible. So we want to see some specific, signs, telltale signs that are going to say, okay, maybe this is really a range. So we're going to zoom in now that we know where our resistance is, we know where our support is. These are the levels that we're expecting to hold. We don't think that we're going to blow through right here, and we don't think that we're going to blow right through here, because this just turned from resistance to support, and this has been our resistance for a while. This isn't something that's just going to break in one shot. We're not just going to power through it. Okay? So at this point, now we're starting to look, we want to see a deviation of either the high and a reclaim, right? Or we want to see a deviation of the low and a reclaim. Because if there's no reclaim, like I said, it could just go down and maybe there's not a range here at all. And that's really what's one of the harder things to figure out is there a range or not? Okay, so let's let this play out a bit. It's coming down, price is coming down. Okay, so there's our deviation, right? It's small, but it's a deviation into support nonetheless. Now we want it to close back inside of the range, which it does right here. So once it closes back inside the range, we would look to get long off the, right at the retest of the range low. Okay, so we'd look to get long, and we're going to put our stop below the support level. Okay, so we could see this was our resistance, support now, stop right below. Let's be a little lenient with it. We want to give it a little room, because what if it comes back down and fully tests the support? It's possible that it comes all the way into here and then it reclaims and then it goes, but we don't know. It might also be pretty aggressive, just little run at the low and it goes. So now we're looking for right here about a 3 risk reward trade, because once you run the low, you simply target the other side of the range. So let's see if this plays out here. And there you go. So at that point, you would have achieved 3 risk reward. So we'll delete that. Now we're seeing a run of the high. Okay, so we've run the high. We're going to play it right directly to the other side. So we're closing back inside here. At this point, since we're closing back inside, we're going to set up our short for the retest. Okay, we're looking for the retest. Stop is going to be above the resistance level. Again, we can't put the stop too tight. We want to put it either above the resistance level or we want to put it below the support level, because it could come out and deviate a bit more. So on this one, our risk reward is going to be around 2. It's not going to be as lucrative as the other one, but at least you're playing a safe setup here, because we don't want to get wicked out by it coming back up. We don't know if this is the top of the deviation yet. Okay, so let's let this play out a bit more now. Whoa, now we're starting to get scared, right? But luckily, our stop is above the resistance level. Okay, this is resistance, this whole area of consolidation. So let's let this resistance, it should hold. Okay, now we're officially back inside the range. We've been underwater for a little bit here, about 25 minutes underwater. Comes back in. One more retest right there. Gets rejected. Showing some strength, or, some resilience, so to say. Comes back up for another retest. But hey, we're good. Remember, our stop's up here above resistance. If the level's not broken, it's not broken. It's that simple. That's something a lot of people get shook out. This could, and obviously, the more times, we've said this, the more times a level's tested, typically the weaker it becomes. But specifically in crypto, I've definitely noticed, you could be testing up here for a long time. If the level's not broken, it's not broken. Okay, it's just how it is, and that's something I've been trying to live more by lately, and it's really been helping me out. Okay, so let's keep moving. And there you go, 1.93 risk reward. So in about, let's see what we got here. What happened? Okay, so yeah, about 2 risk reward, right? And earlier we had played this one with our stop below support. Get a little more room, about 3.5 risk reward. So we made about 5.5 risk reward in about once we identified the range, played the whole range over a 6-hour period, less than a work day, and we got 5.5 risk reward out of that. Okay, so that's basically executing a range trade. I think that a lot of the times we see people talk about range trading, that it's very simplified. And it's not that, don't get me wrong, I don't think I'm the best range trader or anything. There's a lot of great range traders. But I think that it often gets simplified, and people simply say, oh, you got a high, you got a low, put your stop above the high, a little bit, and then there you go. But a lot of the times you're going to get stopped out like that. You need to let price deviate. You need to let price deviate. It needs to reclaim. And then after it reclaims, that's when you look to get in, So we put in a high, we put in a low, we deviate. Once we re-enter the range, we set our long on the range low, we play it to the other side. Again, we let price deviate outside. Once it closes back inside, we would short off the range high, stop above the resistance level or below the support level, whichever side you're playing it from, okay? And then we target the other side of the range. And it's really that simple when you're range trading. Now, like I said, this is a much more niche example. I think you can easily look around the charts and find ranges. It's typically just, you look for a strong bounce and you put in a high and a low and you have ranges form. And it's typically something that's pretty easy to trade. Okay, you got a high, you got a low, it deviates the low. You get in on the retest of the range here. We can see it close, right? Look, you can see it close right there. It comes back and retests on this wick. You can do stop below support, or you could do below this wick right here. Typically, you probably would want to do, well, look, here's a little tip too. I don't usually talk about these things, but don't put your stop below this liquidity right here. Just put it right on the tip of these wicks, because everyone who gets stopped out is waiting in this liquidity pool right here, right? So there's a bunch of people who have their stops right here. Okay, I put my stop like right there. So instead of if the price comes back down, I'll get stopped, and when they get stopped, it gets puked. Okay, so that's a big difference in typically if you're going to see a lot of slippage or not. A little bit of free alpha there, I suppose. Okay, so yeah, see, high, low, deviates the low, retest, high, deviates, even though it's a small deviation, but there's a deviation again, basically back to the low there. A little bit of, a front running there, but, that's because you're near the bottom. That's why I didn't really use this example, because, while you will see in highly volatile moments, you will see ranges form, but my goal here was to show you how it can be done on a much more, smaller scale. It doesn't always need to be this huge range that everyone's looking at. It can just be a little 5-minute range, and you can make, tons of money in a small 5-minute range. Doesn't need to be anything crazy. All right. So hopefully that helps. Executing range trades. Like I said, if you have any questions, if you have suggestions for videos, any feedback, constructive criticism, whatever you got, shoot me a DM at ChaseNL on Twitter. Again, thank you to PrimeXBT sponsoring these videos. At the bottom of the screen, you'll see my sign up and my ref link. Use those if you're trying to sign up, start trading. 1 BTC turns into 1.5 BTC. You get a lot more trades out of that. It's a huge deal. If you want to know why, go check out my risk management video. I also did a formation video last week. I've been cranking these out lately. All right, so thank you very much for tuning in, everybody, and I'll catch you next time. Peace out.